Hello and good afternoon. This is Holly live from Kalkine studio and you're watching The Market Movers. Australian share market wobbled during early trade hours. Notably, the subsiding inflation expectations in the market psychology is carving out a somewhat positive scenario for the ASX 200 during a post-lunch trade. At the same time, the market players remain jittery amid volatile cryptocurrencies, sinusoidal commodity trends and growing virus concerns, and fresh lockdowns in Melbourne. On that note, let's zoom our lens on the market performance today and the divers under the spotlight. The ASX 200 is edging higher post mid-noon session. There is a tug-of-war between IT and materials, pulling the ASX 200 chords, while industrial, consumer staples and healthcare sectors are trading in the red today. Let's now zoom our lens over to the technology sector's outperformance today. The investors are regaining an appetite for the IT stocks, keeping inflation worries on the sidelines for the time being. After spooking the investors for the last few months, inflation fears seem to be subsiding a bit. Concerns about high inflation forcing the US Fed to opt for interest rate hikes lately after a chorus of Fed officials reiterated that the recent upsurge in inflation would be transitory. Meanwhile, we can still see some reflection of inflationary concerns in the recently released US consumer confidence figures, which demonstrated a fall for the first time this year in May. The consumer confidence trickled down as Americans were less optimistic about the labor market and income prospects over the next 6 months, possibly due to higher inflation and waning fiscal support. All eyes are now glued to the revised first quarter GDP growth numbers, to be unveiled by the Bureau of Economic Analysis later this week, which may define the Fed's attitude over inflation that has been shaking the markets this year. The traders are also awaiting a crucial US inflation data this week. Moving on, let's take a look at the material index pulling up the strings of the ASX 200. The heavyweight Australian miners Rio Tinto, Fortescue Metals and BHP Group Limited are trading in the positive territory despite some selling pressure witnessed in iron ore space. On Wednesday, Chinese steel and iron ore prices tumbled after the Shanghai Futures Exchange vowed to look into abnormal transactions, further strengthening the government's ongoing quest to temper commodity inflation. Iron ore prices have been under pressure lately as top metals consumer China vowed to strengthen price controls of key materials over the next 5 years, including iron ore. On the other hand, however, Australian gold miners such as Newcrest Mining Limited, Gold Resources Limited, Remelius Resources Limited, De Grey Mining, are trading lower amid softening gold prices. Gold fell below an important level of $1,900 an ounce on Wednesday, as recovery in the dollar and US Treasury yields dimmed its appeal. However, continued expectations of a dovish stance from US Fed capped its losses. Let's now take a look at some stocks that are under the spotlight today for the driving the ASX 200 momentum. First up, we have Champion Iron, which is leading in the gainers pack of the ASX 200 on the reporting record financial results for its fourth quarter and 2021 fiscal year. The company has noted FY2020 EPS, that is earnings per share, of 97 cents, EBITDA of $819.5 million, and net cash flow from our operations of $624 million. Moreover, as indicated by the company, the construction work is progressing as planned, with more than 200 individuals actively working on Phase 2 of the project, which is expected to be completed by mid-2022. Notably, Champion is building on the market's robust appetite for our high-grade iron ore concentrate within the growth projects. And before I share more trending updates on the ASX listed stocks that's gaining today, it's time for a short break. At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. Kalkine TV. Welcome back. This is Holly live from Kalkine Studio, and you are watching the Market Movers. Let's have a look at some more trending updates on ASX listed stocks that are gaining today. Surprisingly, wealth manager AMP Limited is witnessing gains, while ASIC, that is the Australian Securities and Investments Commission, sues the AMP for allegedly charging deceased customers. On Thursday, the Australian Securities and Investment Commission said that it had started civil proceedings in the federal court against 5 companies related to the wealth manager AMP for allegedly involving in charging life insurance premiums and advice fees to customers despite being notified of their deaths. According to ASIC, AMP companies received over $100,000 in advance advice fees and $500,000 in insurance premiums from accounts of deceased customers. The Australian watchdog alleged that the 5 firms charged fees from the families of over 2,000 of its deceased customers between May of 2015 and August. While Costa Group and Fisher & Paykel are trending lower, Costa Group said the first half performance is expected to be marginally ahead of the previous comparable period in the calendar year of 2020, with strong international operations offset by challenges in domestic produce conditions. Across domestic produce categories, the company has seen mixed performances in the current year to date. Then Fisher & Paykel Healthcare Corporation today announced its results for the full year ending the 31st of March 2021. Operating revenue soared by 56%, while net profit after tax jumped up by 82% over the previous financial year. The company's directors have approved a final dividend of 22.0 cents per share. That's an increase of 42% on the final dividend last year. The dividend will be paid on the 7th of July. On the other hand, Commonwealth Bank edges up on remaining banking for the digital economy and investing in Little Birdie and Amber. CBA will be incorporating new services into its platform and announced a strategic partnership with Little Birdie and Amber. It also launched a pilot under the new Consumer Data Right, or CDR, and became the first major Australian bank to allow customers to view bank balances from other eligible financial institutions directly in the CommBank app. Moving on, shares of country's largest independent coal miner, Whitehaven Coal, hits a 1-month high on an update over Vickery project. The company stated that it would work to get an environmental protection approval for its Vickery extension project, following a federal court's dismissal of a class action lawsuit against the miner. A class action lawsuit was first filed in March by a group of teenagers who argued that the expansion of the Vickery project in New South Wales would contribute to climate change and endanger their future. Well, almost the end of the show, but since we have touched upon the issue of climate change, let me touch again upon the base of trending news on Wednesday. A Dutch court ordered the oil and gas behemoth Royal Dutch Shell to cut its carbon emission by 45% by 2030 than 2019 levels. The decision came as a result of a landmark case that a group of climate change activists filed. Significant decision came in favor of the planet, and it has set an example for the likewise cases against pollution across the globe. Well, that is all for now. Stay tuned for more live updates on Kalkine TV across diverse markets, themes, and sectors. This is Holly Shields signing off.